Let's start here. Myth number one, multifamily investing is only for the wealthy. Are you wealthy?
I'm not wealthy. Do not come from wealth.
Yeah, this is obviously not true. I know a lot of people in the multifamily investing world, and I don't think any of them came from wealth, honestly. I don't know if wealthy people really do multifamily investing. Honestly, I think they're probably doing a lot of other things with their money, but multifamily, large multifamily units, probably 400 plexes and things like that, maybe. Or they're investing with a group of people, but
Yeah,
you
putting it
don't.
into a fund.
A lot of the things that we're looking at are not even going to be considered by like the ultra wealthy people. So there's a market for everybody to get involved. They wouldn't even be interested in something for a couple $1,000,000 if they're wealthy, because they would basically be making nothing, and it would be a waste of their time. So they're looking for big, large investments. So
Right.
this kind of keeps them out of the markets on these smaller ones, and you're kind of competing against people who are very similar to you, who are trying to scrape together what money they can to invest and get started, and
Right.
so it's a very even, I think, playing field.
And especially with people, I read a book recently called What Would the Rockefellers Do? And a
Oh,
lot of what they invest their money into is guaranteed income, like life insurance policies or dividend paying stocks. Or a lot of times they would invest into funds where they're not even involved with the deal. They're just a limited partner, or they're putting their millions and millions and billions of their net worth into a property or a business or a, you know, oil field in
mm-hmm.
Texas, something like that, where they're putting all their money up and they're not involved with the operations at all.
Right.
And so I don't even think they wouldn't be interested in anything that we look at.
No, no, they look for, because when you have that kind of money, you have to put it in extremely large, liquid, things that have a lot of liquidity. So like stocks and bonds, and because you just have so much money. You know how long it would take you to put $6 billion into real estate? It would take forever.
Yeah.
It'd be like a full time job. So
You'd be buying every
you'd
single
be buying
buy or burn
everything.
we look at. If it's a
Exactly.
burn, if it's a buy, you'd be putting all your money into it.
Exactly.
And I also think, talking about the Midwest, because we're both from small towns, right? The wealthier people in these areas are lawyers, doctors, and some of those types of jobs. And a lot of times, at least from my perspective, I don't see a lot of times them investing into multifamily homes, right? A
No.
lot of times they have worked their butt off throughout college for 12 years, 8 years, and then they finally get their paying job and they're making 200 to 500 grand, 100 grand a year. And then they're able to just buy a house, buy cars, and pay for their family. They have no interest a lot of times.
Yeah, I think mostly it all goes into mutual funds, stocks, index funds, things like that. Because they're busy people. They don't really have time to watch over a property, and they don't know anything about it, and so they don't necessarily have the time to learn or any of that kind of stuff. So
number one myth debunked. It is for anyone.
Get it out of here.
Is interested in it. Really, anybody that can find a way to scrap the money together and find properties that are good deals.
Yeah. Multifamily investing is only for the wealthy after you accumulate a bunch of multifamily. Then you're the wealthy. So
yes, then you become the wealthy.
All right. Myth number 2, active involvement is required for success. Now, I would say this one has some truth to it. By active, you don't have to manage the property or be the maintenance guy or anything like that, but you do want to be watching over your investment, just like you would with any investment. So if that's active, then it is active in that way. And a lot of people who own multifamily are like, what would you call it? Owner operator, or like owner manager, where they're looking at the expenses. They know what things are because they probably had to be really involved when they first started, because there's a lot to learn, and it's helpful if you can be involved. Now, people have jobs, and so it's hard for them to be involved, but just so that you know the cost of things, so that you have a good relationship with your manager, so that you know who the maintenance guys are and what quality of work they do, things like that. Because it is a physical asset. So there's a lot of physical things that go on with it that you just for your own return and peace of mind, you want to kind of be paying attention to. Now, I'm not all that involved anymore. So, maybe I put in 10 to 15 hours a week or something. I'm not going to the properties every day. I'm not, doing any of that kind of stuff.
Right.
I've learned how my managers operate, how the maintenance people do, how they do good work. And so then I don't really need to be watching over it. So if you wanted to be 100% passive, you would have to be like in a fund probably, or once you get your manager established and your maintenance established, then you wouldn't really have to do anything.
I don't think it's a good idea to not be involved at all.
Yeah.
But I
Yeah.
do think that there at the beginning, especially the first couple years, you're very involved. Like you're spending overtime hours, probably working on the property and making sure everything's correct. And then after, your first 2-3 years of operating that property or multiple properties, you kind of get an idea of what it's going to look like moving forward. And you can kind of step back a little bit to,
Mhm.
you don't have to interview all the tenants. You don't have to do all the things.
Yeah.
You don't have to take them on showings. That you can have management or
Exactly.
software to do all that stuff
Yeah.
for you.
Yeah. It looks like this guy was talking about active management. So yeah, definitely don't have to manage. And that actually is why I bought the first one I bought. It was a 42-plex that I purchased. And the reason I bought one that large is because I wanted it to be large enough to where I could hire a manager, so I didn't have to do it, because I didn't want anything to do with management. And so yeah, definitely don't need to.
Right.
Okay, myth number 3: multifamily properties are riskier than single family homes.
I don't think so.
I don't think
they're
so.
Riskier. Now, there's more money being put up in a multifamily home than a single family home, but think about the margins that you're going to be making in a single family home compared to a multifamily home.
Right.
If your house is vacant and you only have one possible person to rent it in a single family home,
right,
you're not making any money at all. And even if you have somebody, let's say that it's like a $200,000-$300,000 property, and your mortgage is $1,100 a month, and they're paying $1,500 a month, you have a $400 profit a month. Like that's really it could be worth it to build equity over time, but it's a lot riskier because if the AC goes out, you made no money.
Like that year. Yeah. Exactly.
And that's my opinion. I don't know. What do you think?
No, I agree. Yeah. Single family stuff, it's much harder to make money in. Because they're usually lower price as well. So with like a 4-plex or something, you're going to buy each unit for, let's say, $70,000, but you're probably going to make $1,000 rent on each one.
Right.
And so you're already, and that's a pretty good ratio for you. And it's just a matter of scale. All these properties are located in the same location, with the same lawn, with the same roof, with the same concrete. Instead of, if you had 4 houses, now you got 4 lawns, 4 driveways, 4 sidewalks, 4 different roofs.
Yeah.
And 4 furnaces that are going to go out, whereas maybe you have one in the 4-plex that goes to all of them. And so it's definitely, I mean, I've never liked single family homes. I have accumulated some over the years just because they kind of made sense to buy at the time to help make another deal work and stuff like that. So that's why I've accumulated them, but I don't really like them. I don't feel like I make any money on them at all.
Right.
And it's like,
it's a ton of work.
It's like you make $100 a month. Like, I'm not interested in that.
Right.
I don't want to make $100 a month.
Pays for one trip to McDonald's with the family.
Yeah.
Right.
Yeah. So I wouldn't advise anybody really to do it. The reason people do single family houses is just because they're available and they're easy to get into, right? Because there's just so many of them. There's not that many multifamily. Like, I could go buy 10 single family homes right now if I want, but there's no multifamilies for sale.
I do think they would be more liquid than
easier to sell. Easier to sell.
Yep. Because there's 2 markets for it. There's investors and there's people looking for their house. But in terms of cash flowing and building wealth, I think that multifamily is less risky.
Yeah, for sure. And single family home, if it's vacant, you have 100% vacancy.
Right.
So
you're out of luck.
No thanks. All right. Myth 4: real estate investments are not liquid.
Okay.
Well, they're not as liquid as like a stock, so they're less liquid than that, but they're not that difficult to sell. Now, maybe if it's like a massive complex that only has 10 buyers who could possibly buy it, maybe then, but As far as all real estate investments, like single family homes, those are super liquid. And multifamily is pretty liquid too, because there's a lot of people who want to get into multifamily. So there's a lot of buyers out there. Um,
But I also
and
think there's other ways that you can make your property liquid, because with the stock portfolio, you can take out a portfolio loan, right? Or with life insurance, you can take out a life insurance loan to against the cash value. You can do the same thing with a property where you refinance it once it builds
yeah,
equity, and once you have more value in the property, you can always refinance it,
yeah,
right? It takes a couple steps to refinance a property, but you're able to pull your capital and refresh it and use it again tax free,
yeah,
right? You're not paying any capital gains tax when you have a multifamily piece of real estate and you refinance it. And like what you do, you
mhm,
can use the equity
yeah,
as to get another loan for a property.
yeah. Use the property as collateral and use the equity in it as the down payment for the next property. That's what I like to do. There, the interesting thing about real estate is, especially if you want to do it as just like investing, you pretty much hold it forever, because it doesn't ever make sense really to sell it unless you have your eye on something else and you're going to 1031 it.
Right.
And
And
so
again, tax free exchange.
then it's tax free. But just to outright sell it is almost nobody to, that's almost always a terrible idea. And because then you get hammered in taxes. So it's kind of an interesting thing because it makes you just stay in the game and to just keep accumulating, because you're like, well, I have this property that's gaining value, and so now I have all this equity, so I guess I could buy another one.
Right.
And so I don't think a lot of people who get into the game really give a crap all that much if it is how liquid it is,
Right.
honestly, because it's not really a short term investing thing, and that's usually what you would want things to be liquid in. 6 month, okay, well, I'll sell in 6 months. But most in real estate investors, they keep these things for a very, very long time, because you're not incentivized to ever sell. You're incentivized to keep it and to buy more by the government.
Yeah, with tax depreciation and with different tax credits based on the areas you're in, you're incentivized to keep it. But I do think that people that flip houses would maybe believe that it's not as liquid, but if they're flipping houses, they should have a good idea of the market and when it's going to sell before they even get into the property.
Right.
And you flipped houses, so you know what that looks like. And so how liquid was it for you in single family homes, in that case, or even, quadplexes, triplex, whatever you were flipping?
Yeah, those things they're super easy to sell. I mean, it's pretty liquid. I would not really, I would just call it liquid, honestly, because it's just like
6 months.
And especially if you know your market and you can price it right, you're going to sell the thing in a couple days. And so it's really, yeah. I mean, like I would say, it would mostly apply to like commercial property. Those wouldn't be as liquid, and to massive apartment complexes. But but then again, I see he says mentions in here syndication deals. Well, those don't really seem that liquid to me at all, because how would you can't just sell it when you want.
Yeah.
You're kind of stuck in this. Yeah.
I guess you could sell your share of the property,
I guess, to one of the other owners.
right?
And so but they would have to want to buy it, and can they get a loan for a share of how does that all, I don't know.
Yeah.
But
we try to stay away from syndication.
Yeah, I'm not a big fan of syndications. I mean, maybe if you have so much money that you don't know what to do with and you don't really care about how good your return is. But when you're the multifamily owner and you run it and you're watching over you'll get like a 30% return every year.
Right.
I mean, it's a crazy amount of return you can get because of the tax benefits, because of the appreciation and all that kind of stuff. And if you get seller financing, you don't put any money in, now you have infinite return, because you have no cash into it. So it's all just, so you can't get returns like that in anything else.
Absolutely.
So, okay, myth number 5, multifamily investing is only for experienced investors.
Well, sounds like you've been an experienced investor since the day you were born, right?
Yeah, I would definitely disagree with this. I mean, most of the people who get into it, I would say, aren't experienced investors,
Right.
you
That's
know,
their first.
and it's their
There's
first
a
thing.
first deal.
Yeah.
Yeah.
Yeah. And
Huh.
you don't have to be an experienced investor. You have to, know the basics of how to analyze the deal so that you don't get screwed
That's why
from
you
the start.
watch Jay Allen
And that's
Eckert
why
on
you
YouTube.
watch me. That's right. Buy or burn, baby. And so, but you don't have to be an experienced. I don't really even know what an experienced investor would mean. You know, like
I think you learn lessons as you do it.
yeah.
And if you seek for guidance from people, you learn a lot.
Yeah, I would say that it's more so not for experienced investors, but more so for people who um, are motivated and dedicated to learning and open to the experience and open to learning how it works. And that's really all you need to be.
Right.
And like I've said in the past, I know a ton of people who do multifamily investing. They all started out as inexperienced investors, and they're all doing fine. And it's not like these are the the geniuses that run society. These are just regular people.
Yeah.
They're not accountants. They're not deal analysts. They're not stock trader. Like they're not any of that. They're just a normal person who's working a normal job, but they can do the calculations because they're like, okay, well, this is more money than what it would cost me, so I think it's a deal.
Exactly.
Like basically that's
some simple math.
Yeah,
of course, be smart, right? Don't over leverage yourself. Don't put yourself in a bad deal. Like don't look at the first one you see and be like,
right,
that's a buy.
right.
But
yeah,
it doesn't take years of experience.
no,
you don't have to be on Wall Street to invest into a multifamily home.
no. Okay, myth number 6. It's difficult to find multifamily investment opportunities.
I would say that's fairly true.
Yeah. Yeah, I would say it's not impossible. If this said it's impossible to find them, but is it difficult? It's a little difficult, especially given the market and the rates and things like that. But if you put in the time and you do the work and you look at the deals and you talk to people, you will find something. Like it isn't all that difficult.
No.
It kind of depends on what your criteria are. If you want to find something just in your town and you want to stay in your town, that makes it a lot more difficult than if you're willing to go 2 hours outside of your town. Then there's obviously a lot more deals outside of your area. So that expands. If you're willing to go 10 hours, or it doesn't matter where it's located. Well, now you got unlimited deals.
Yeah.
For sure.
So I would say fair. That's pretty true.
Yeah.
It's difficult.
It's maybe half true, huh?
Right.
All right. Myth number 7, multifamily investing is only suitable for local investors. Yeah, I don't know. Not only. I would say I have all my stuff locally, and I like it that way because it gives me a sense of control over all of it. I can go to it if I need to, and I can watch over it, and I have everything self-contained. I have a good relationship with my banker, and he knows all the properties and things like that. So there's a lot of benefit, I think, to keeping it local. If you can get something that's a good deal that's not local, the biggest issue would just be management. Right. You would want to make sure that you are talking with management. You're probably visiting the property once or twice a year to make sure they're not lying to you. And once you get all that, then you're good to go, and the manager can do it. You're not going to be able to have the kind of oversight as if you were right there with it. And so I think your return would be a little lower probably as a result.
It'd be more difficult to start. But
yeah.
I think once you're experienced, and if there's somebody that you can send there and they want to learn more, they want to be your manager, and you're paying them well, like I think that it's not as big of a problem.
Yeah. And, if you are open to investing anywhere, I mean, that's a huge benefit because now you can find a really good deal because there's
you could own a property in Maine and you could also own one in California, right?
Right. Yeah. So, exactly.
Yeah, I think it's not only
suitable. No, there's a lot of people, honestly, even here in our town, a lot of these apartment complexes are owned by people from California, oddly enough.
Yeah.
So
they probably sold all their properties
and they made a ton of money on it. They make a ton of money. A couple of them I bought were from people from California, and I'm like, why do you own something in
Nebraska,
Here,
right?
no, it's weird. Okay, myth number 8: multifamily properties are prone to constant maintenance issues.
What do you think?
Um, yeah, I mean they are properties, so there's maintenance issues on every property. Be the same with single family or commercial or anything, but I would say there probably is more maintenance. There's going to be more maintenance on a multifamily property than on a single family, probably.
Right.
More like ongoing, where it's like you got to clean the common area, and you will got to, somebody needs to clean the washer and dryer. Whereas in a single family, you're not doing any of that kind of stuff.
No.
And if you get good tenants, you shouldn't have any real issues of them like breaking doors and, causing a bunch of damage or smoking in the unit or something like that.
Right.
If you vet your people properly, there won't be that much maintenance. And most of it comes when somebody moves out, and you need to like paint the walls maybe because they've
Clean the
lived there for
apartment.
3-4 years or something. Yeah, clean the apartment, have somebody mow the lawn. But then again, you're not going to be doing these maintenance things.
And as somebody who has an Airbnb, there's a ton of maintenance with Airbnb. We have to clean the property every single time somebody stays.
Yeah.
We have 7 different tenants in the month of December right now, and we have to have a cleaner there every single time. We have to have the snow scooped, and we also have to have the lawn in the summer that has to be mowed. We have to make sure nothing is breaking, and that's with just one person staying at a time. Compared to where if you have your first one's a 42 unit apartment, you have 42 problems in one place, right? If you have
Right.
multiple Airbnbs or multiple single family homes, and let's say you have 10 of them, right? You have 10 problems in 10 different places.
Yeah.
And so I think that one of the things that excites me about multifamily compared to single family is that maintenance is all happening in one place.
Yeah.
And there's one person to do it all.
Yeah.
Or
Yeah.
a couple different people to do it.
Yep, and that person will be you'll be a priority to them most likely because that's a lot of work for that person, and so they're going to be a reoccurring client. They're going to get really familiar with the property. They're going to know exactly what you want to use and how it go. And most of the apartments are all exactly the same, so they're really familiar with it.
Right.
With an Airbnb, if it's a handyman from the area, you're like one at the bottom of his list because he's already got his people and he's already got his things going on, so it's like, well, but you have to get in here, and we've only got 24 hours before the next person's here, so like we need this thing fixed.
Absolutely.
That's a little more stressful. That's a good example of constant maintenance and management. It would be Airbnbs or like a hotel.
Yeah.
And it's like that would be constant maintenance, I would imagine. I don't obviously own any, but it seems constant maintenance there, constant management, a lot of in and out. I would not enjoy that at all. So multifamily is way better than that. The people stay there. So I'd say it's more so about vetting the people and trying to find the best tenants you can.
I think if you had a hotel, you'd have a lot of gray hairs in a couple months.
Yeah.
Number 9.
All right. Number 9, multifamily investments are not environmentally friendly. What?
Don't know. Don't really care. We're in Nebraska. Right?
Yeah. Well, how are they any more not environmentally friendly than anything else? I don't understand. Like, and a lot of the like energy upgrades now make sense. Honestly, like it makes sense to just put in LED bulbs. It doesn't make any sense to put in incandescent light bulbs that are going to burn out every 3 months in the common areas, or whatever. So they're just kind of built into being more energy efficient for all those reasons, Yeah.
I think that's a very subjective topic.
Yeah.
Right? Saying it's not and saying it is, it's like, what is the criteria for being environmentally friendly?
It's like if in order for them to be I have actually considered looking at putting solar panels on top of buildings. There's like grants and things you can get for that, because then basically you get your common area expenses all paid for.
Yeah.
So it's like, well, if that makes sense to pay for those but it didn't make sense financially, so I never did it.
And the thing with that is it won't ever change. Like the price of it won't really change unless you need maintenance, and then that'll cost money. But then you'll have a locked in energy price. But I don't think that it has to do as much with being a good person and saving the environment rather than just whatever makes the most sense for your property, your location.
Yeah.
And a lot of times the more energy efficient it is, the less it costs you. So
right.
Yeah.
Yeah. This This is a funny myth. I've actually never heard anybody say this.
Yeah, I've never heard of that before. All right, number 10.
Number 10, multifamily investments don't align with passive income goals.
Well, what are your passive income goals, right? It
Yeah.
really, if they don't align, that just means that your goals, you shouldn't buy a multifamily home. I think that if your goals align with, what passive income with multifamily looks like, then makes sense. But if not, it's like,
Yeah, I think it would be pretty hard for it not to align with your passive income goals if you're comparing it to other things that are passive income, because it's going to outperform most everything.
right.
So I think that it would be pretty tough to not have it align with your passive income goals, because even if you're not involved at all and you're still just passive, you're still going to make a pretty decent return.